Right, I'm going to say something and I want you to notice what your own head does with it. Last year, in just 3 months, His Majesty's Revenue and Customs quietly handed £46 million back to British pensioners, not because those pensioners were clever, not because they hired anyone, simply because they filled in one form asking for money that was already theirs. And here's the part that ought to keep you up tonight, that 46 million is only the people who asked. Nobody knows how many never did. Their money is still sitting in a government account right now, earning interest for somebody who isn't them. So let me ask you plainly, are you one of the people who asked? Or are you one of the millions who's owed money and hasn't the faintest idea? Because in the next few minutes, I'm going to walk you through the exact bills and payments where this is happening. And I need you to hear something before we start. Because it's the single mistake that costs more than everything else combined. You're about to decide this video isn't for you. If you've got a comfortable pension and a house that's tripled in value, you're thinking, well, this will be for the ones who are struggling. And if you're getting by on the state pension and precious little else, you're thinking, this will be one of those clever schemes for people with portfolios. And both of you are already reaching for the remote. Both of you are wrong. I mean that. There is real money on this list for every single one of you, and on some of it, it's the comfortable one who gets absolutely clobbered, and on others, it's the pensioner on a modest income who's owed the most. I'll tell you on each one which of you it hits hardest. So nobody folds their arms and mutters, "Not me." Because the uncomfortable truth is that pensioners at every income level in this country are handing over money they never had to. They're just doing it in different ways. My name's Edward Hartley. I spent the better part of 30 years on the wrong side of the desk, so to speak. The side where the rules get written, not the side where ordinary people sit filling in the forms and hoping for the best. I'm not selling you a thing, and I never will. But I saw the same quiet tragedy play out year after year. And it was never the chances trying it on. It was the careful, decent, honest ones. People who'd have been mortified to take a penny they weren't owed, paying out a small fortune they were never obliged to pay, because not one soul had ever told them they could stop. So let's put that right. Stay with me to the end, because the last one is the one almost nobody knows exists, and for a lot of you, it's worth more than all the rest put together. Let's start with the one where the money might be owed to you today, right now, not next April. It's the tax that comes off when you take money out of your pension pot. And I need you properly awake for this, because it catches hundreds of thousands of people, and the comfortable retiree gets hammered every bit as hard as anyone. Here's what happens, and you'll recognize it in a heartbeat if it's happened to you. The day you take your first proper chunk out of a pension, maybe to do up the kitchen, maybe to help a grandchild onto the housing ladder, the pension provider very often hasn't got a proper tax code for you yet. They don't know what you'll owe across the whole year. So they reach for what's called an emergency code, worked out on what the taxman charmingly calls a month one basis. And here's the bit that makes people's jaws hit the floor. That emergency code treats your one-off withdrawal as though you're going to take that exact same amount every single month for the rest of the year. So you pull out £10,000 once, and the system behaves as though you'll be pulling £10,000 a month, £120,000 a year, and it taxes that first payment as though you've suddenly become a high earner. People take out a modest sum and watch thousands vanish in tax on the spot. Tax they very often don't owe a penny of. And I'm not giving you a hypothetical. The average refund on this last year was around £3,300 per person. Some savers with bigger pots have reclaimed over £100,000. And since these rules came in, His Majesty's Revenue and Customs has now paid back more than £1.5 billion of overtaxed pension money. £1.5 billion quietly clawed back, one form at a time. So what do? You don't shrug and assume the computer knows best, which is exactly what most people do. There's a reclaim process built specifically for this. You don't need the form numbers memorized. You need one sentence. I've been taxed on a pension withdrawal using an emergency code, and I'd like to reclaim the overpayment. Say that in writing or on the phone, and you set the whole thing in motion. Usually, you'll have it back within 30 days. And here's what ought to make you cross. If you do absolutely nothing, the taxman will eventually sort it out. Usually after the tax year ends, sometimes the better part of a year later, and you get no interest on it. None. They've had your money interest-free for months. Money that was never theirs to begin with. Picture Jeffrey, 68. He took $12,000 out to put a downstairs bathroom in for his wife, whose knees have given up on the stairs. The provider taxed it as though $144,000 was landing every month. He lost the best part of £4,000 on the spot and assumed, like a decent man does, that it must be right. It wasn't. He got it back. One phone call. One form. That's number one, and for some of you watching, that money is owed to you today, which leads straight into the second one, because it's the other half of the same coin. Tax taken on money, the rules say, should be tax-free. This is the tax on your savings interest. Now there's a proper muddle here. Some pensioners think all their bank interest gets taxed. Others think none of it does. Both are wrong, and the truth is exactly where the money's hiding. Every basic rate taxpayer gets something called the personal savings allowance. This year, it lets you earn £1,000 of interest from ordinary savings accounts with no tax to pay at all. On top of that, there's a separate thing called the starting rate for savings, worth up to £5,000 more, and it's aimed squarely at people whose other income is low, which describes an enormous number of pensioners living mainly on the state pension. Stack those two together, and a pensioner of modest means can have a genuinely remarkable amount of interest land in their account, entirely untaxed. So where does it go wrong? Two ways. First, interest rates climbed and stayed up, and a great many cautious savers and pensioners are the most cautious of the lot, have quietly started earning real interest for the first time in 15 years. And nobody's looked at the tax position. Second, and this is the maddening one, the taxman adjusts your tax code to collect tax on your interest automatically based on what you earned the previous year. So if your savings dropped or the rates dropped, you can be taxed on interest you're not even earning anymore. If you're on a modest income, there's a very good chance the correct tax on your interest is precisely nothing, and you should never have been touched. The words you want are, "I think my tax code is collecting tax on savings interest that falls within my allowances. Please check the figures you're using." The banks report your interest to the taxman directly now, so the information's just sitting there. It's the applying of it that goes wrong. Pauline, 71, moved her life savings into a fixed-rate bond when rates finally got decent. Her tax code quietly changed to claw back tax on the interest. Nobody flagged that her income was low enough that the starting rate covered nearly all of it. She'd been overpaying for 2 years before anyone took a proper look. Now, number 3 is the one that makes people genuinely angry once the penny drops. Your council tax. And I want to be precise, because this is exactly where pensioners at both ends get told, or just assume, that they don't qualify, when very often they do. There isn't one form of help here. There are several. The first is council tax reduction, sometimes called council tax support. It's the income-based one. And here's what most people don't know. The rules for people of pension age are far more generous than the working age rules. If your income's low enough, this can knock a very large slice off your bill, in some cases to nothing. And a detail that catches people out, the first £10,000 of your savings is completely ignored. People assume that because they've a few thousand put by, they're disqualified. They're not. The second is the single-person discount. If you live alone, and a great many older people do, particularly after losing a partner, you're entitled to 25% off your council tax. Full stop. Regardless of income or savings. It's purely about who lives in the house. I've met widowed pensioners who carried on paying the full whack for years after they were left on their own, because nobody ever told them the bill should have dropped the moment they were living alone. And the third, the one comfortable homeowners always assume can't possibly be for them, is the severe mental impairment disregard. If someone in the household has a condition such as dementia, is medically certified, and receives a qualifying benefit, they can be disregarded entirely for council tax. If they live alone, the bill can drop to zero. There's no income test whatever. And it's wildly underclaimed because families are too overwhelmed coping with the illness to think about a council tax bill. Look how that covers everyone. The modest income pensioner gets the income-based reduction. The widow or widower living alone gets the quarter off, no matter what. And the comfortable household dealing with dementia gets a disregard the well-off always assume isn't for them. And not one of these is automatic. Your council doesn't look at the electoral roll, spot someone living alone, and apply the discount out of kindness. Why would they? Every pound of discount you claim is a pound they don't collect. You have to ask, ring them, and put 3 plain questions. What reduction do you offer for people on a low income? Am I getting the single person discount? And do you have a disregard for severe mental impairment? Number 4 is different because instead of a bill you're overpaying, this is money you're entitled to receive. And it's so widely missed that it belongs squarely on this list. It's called attendance allowance. And the moment people hear the word allowance, 2 things happen. The comfortable pensioner thinks, that'll be means tested, not for me. And the modest one thinks, I'm not disabled, I manage. Between those 2 assumptions, over £5 billion a year goes unclaimed. 5 billion. And both assumptions are wrong. Attendance allowance is for people over state pension age who need a bit of help looking after themselves because of a physical or mental health condition. And 2 things make it extraordinary. First, it is not means tested. It does not matter how much you've got in the bank, how big your pension is, or what your house is worth. A comfortable retiree with savings and a paid-off home qualifies on exactly the same terms as anyone else. Second, you don't actually have to be receiving any care to get it. The test is whether you'd benefit from help. With washing, with dressing, with getting about the house safely at night. Not whether you've got someone already doing it. It's worth either £76.70 or £114.60 a week, depending on your needs. That top rate is nearly £6,000 a year, tax-free. And here's the part that surprises even people I've worked with for years. Claiming it can quietly switch on other things. It can unlock extra pension credit, and in some cases, trigger the very council tax help we just talked about. It does the opposite of what people fear. Rather than reducing your other support, it can lift it. Dennis is 80, bad hips, unsteady on his feet, a fall waiting to happen every time he goes up to bed. Comfortable enough. Decent pension, house long paid off. He'd never have dreamed of claiming because that's for people who need it. He needed it. He just didn't know that needing help and needing money aren't the same test. Once he claimed, it came to over £100 a week and switched on a council tax reduction he'd no idea existed. And number 5 is going to feel almost personal because it's the fee you pay to deal with all the others. Every year, a great many pensioners with perfectly ordinary affairs, a state pension, a works pension, maybe a bit of interest, hand a few £100s to a high street firm to fill in a self-assessment return. And a fair number of them legally qualify to have that exact same thing done by trained, capable people for absolutely nothing. There are 2 charities that exist precisely for this. One is tax help for older people, aimed at older folk on lower incomes, dealing day in, day out with exactly the questions retirees have. The other is tax aid, which helps people on low incomes with tax problems more broadly. Both are free. Neither is selling you a thing. Now, I'll be straight with you, because this cuts both ways. If your affairs are genuinely complicated, a string of rental properties, a business, and a estate to untangle, then yes, pay a proper professional, and it will be worth every penny. But if you're a retiree with 2 pensions and a tidy set of papers, don't assume you're obliged to hand over £300 for what amounts to careful copying out. Maureen, 74, paid a firm every January for 11 years. Her affairs? A state pension, a small teacher's pension, and the interest on an ISA, which isn't even taxable. She rang the charity. They looked at it in an afternoon and told her she very probably didn't need to file at all. Now, I promised you the last one is the one almost nobody knows about, and here it is. It's not on the usual lists. And it's pure money left on the table. If you're married or in a civil partnership and one of you earns below the tax-free personal allowance while the other is a basic rate taxpayer, you can transfer part of that unused allowance between you. It's called the marriage allowance, and it's worth up to £252 a year. Better still, you can backdate it 4 full years. That's over £1,000 in one claim. And here's why pensioners are the single biggest group missing out. The way it was sold, everyone assumed it was for working couples. It isn't. Over 2 million eligible couples have never claimed it, and retired couples are the largest group of all. If one of you is on the state pension, below the allowance, and the other draws a private pension in the basic rate band, you very likely qualify right now. And a detail that stops people. If your spouse has died, you can still claim, backdated to before they passed, as long as it was on or after April 2022. So let me pull all of this together with the one idea that matters more than any single rule I've handed you. In every one of these cases, the rules already say you qualify, or you're exempt, or the money is owed back to you. The overpaid pension tax is yours. The savings allowances are written into law. The council discounts sit on your own council's books. The attendance allowance is funded, ready, and completely indifferent to your bank balance. Every one of them is real, and not a single one is automatic. I think of it like the tide going out. When the water pulls back, it doesn't take everything with it. It leaves things behind on the sand. Perfectly good, belonging to somebody. Your money is out there on that sand right now. But nobody's going to walk down and gather it up and hand it to you. The whole arrangement is built so that what's been left behind stays left behind, unless you go and pick it up yourself. And it does not matter which end of the beach you're standing on. The struggling pensioner assumes the good stuff is reserved for people with money. The comfortable pensioner assumes the help is only for people who are struggling. And so both of them keep paying. That, right there, is the entire game. So here's what I'd ask, and it costs you nothing. Send this to one person over state pension age, or getting close. A parent, a neighbour, the friend down the road you know is far too proud to ask. It doesn't matter whether they're scraping by on a single payment or sitting comfortably on a paid-off house. The odds are very good. They're paying at least one of these bills right now, for no reason on this earth. Stan, 83, watched a video much like this one because his daughter sent it. He made 4 phone calls the following week. By the end of the month, he was better off than he'd been in years, and he hadn't earned a penny more or changed a single thing about how he lived. He'd just gone down to the sand and picked up what was already his. Go and do the same. And if this was useful, do subscribe. It's how the next one finds its way to you.